Today was about digestion, digesting relatively good economic data, both from retailers, but also from the consumer, but also digesting 4 big weeks of stock rebounds, brought us up double digits off the October lows. So the market's going to take a pause here and see what the impact of midterm elections and the consequences we may see, but also what could happen with lower oil prices. How's that going to fare, again, at the big, important holiday shopping season that we're just upon?
But fundamentally, you bullish on this market?
You know, market's a bit overbought here. We're ahead of ourselves. We've had that big rebound. It's a bit dangerous to chase these rallies as we've seen, and nobody wants to get burned going into the end of the year. Superstar systems don't work in baseball, they don't work in football, and they don't work in mutual funds in corporate America, because your superstar gets old, you overpay them when they're underperforming, and that's exactly what happened here. Nobody minds paying for performance. We paid for underperformance. That's what we're so irritated about, and we want the money back or we leave, and that's what's happening.
John,
money walks out the door.
Steve.
History's on our side. Following the midterm elections, you got seasonal benefits coming into the end of the year. You got money pouring in. It's almost like a melt up the last couple weeks. Money just coming in, low volume, which is really scary. I like to see the heavy volume melt up, not the light volume melt up. So it feels like it's been short covering. That's a little bit tenuous. That doesn't feel like it's sustainable going into the new year.
Larry, is it going to be an iPhone Christmas in your house?
It will be an iPhone Christmas. I've got my iPhone right here, and I'm due for an upgrade, so we'll be taking advantage of that and contributing to the bottom line.
Are you getting the 6 or the 6 Plus?
I want the 6 Plus. I'm going to settle for the 6. Okay?
Why?
It's too big.
It's just too big. I mean, it's too big. It's like carrying around, you know, it's like literally a Jeep in my pocket. I mean, I don't need that. One of the reasons our firm was a very early adopter of passive vehicles, particularly exchange-traded funds, which have simply blossomed in this country, more than 1,600 exchange-traded funds, over $2 billion in assets today, is the benefits. It's tax efficiency, it's low cost, it's transparency, it's simplicity. However, today, we're starting to lose a lot of those benefits. The industry's gone full circle. We're taking active strategies on these passive vehicles.
The smart beta stuff, you mean?
Smart beta stuff. You lose the tax benefits. You start to have higher turnover. You lose the cost benefits. You lose the transparency, lose the simplicity. Even Jack Bogle himself is talking about how horrific these changes are. So you take a great vehicle and you blow it up, and that's exactly what's happening. So I think Jeff makes a good point. It could happen, but I think we're going to lose some of the benefits of passive either way. It's about money. It's not about ideology. And cities and towns need the revenue. We should be taxing
That itself is an ideology, by the way.
It is. I'm guilty as charged. But look, it's whether it's medicinal or whether it's simply as a vice, these things can be taxed. They can pay for schools. They can pay for roads. There's a lot of money in marijuana. Let's get some of that as tax revenue to help back in the community.
So you think the federal government should move to decriminalize this?
I think you need clear legislation. You need clear regulation so that people can commit capital, and that can in turn result in revenue back to the local community where it's well needed. Joe, as a longtime Red Sox fan, I'm so conflicted here because I love what you're doing. I'm so
That's why
supportive.
they sat you over there and me over here.